As Les mentioned, I'm Vice President of MarkTech International, and I have 30 years of international business experience, exporting and importing. I specialize in new products and technologies for new markets, and I've done international joint ventures, collaborations, licensing, and consulting, and exporting, as we've kind of discussed, is about sales, and it's about establishing relationships, and we help you build new relationships and new customers. That's who we are. So we have a question for you today, and the question is, are you open for business with the world? Because according to the U.S. Department of Commerce, each year, U.S. companies export well over $2 trillion, that's with a T, dollars of goods and services. In the U.S., more than 280,000 companies export. However, that is less than 1% of America's 30 million companies, a percentage that is significantly lower than all developed countries. And of the 280,000 U.S. companies that do export, 58% export to only one country. That would be probably Canada or Mexico, but not both. The good news is you can be an exporter. More than 2/3 of exporting companies are less than 20 employees. But these only account for less than 30% of the value of exports. Developing your export sales has never been easier. We want to thank you for joining us today at CMMA to explore how your business can expand your export sales and how to get paid. Now you might ask, why should you expand your export sales? Well, access to new markets has never been easier, even in a pandemic. Demand, 70% of the purchasing power, as Les mentioned, is outside the US. Improved top line and bottom line profitability, and maybe more important for this group, improved valuation of your company. We have brought together an expert panel to walk us through how you can expand your export sales and get paid. And first, I want to let each of the panelists introduce themselves. Michel, how about if you start?
Sure. Good morning. Thank you very much for all for attending. I really appreciate it. Had a great discussion in our first panel or discussion group. Unfortunately, I got kicked out of Zoom in the second group, so I had to re-log in. So sorry about two guys that were there. I didn't mean to leave you hanging, but technology is great when it works and not so good when it doesn't. So anyway, I just want to give you a brief background on myself. Like I say, I have a very difficult last name. My father was French, but I'm born in Sweden, Stockholm, Sweden, actually. So I came over here as a student many moons ago. I've spent the last 35 years working for Minnesota-based manufacturing companies, focusing on helping them export outside of the United States, expand sales channels, set up distributor networks. My companies I worked for have all been in the SME category, $5 million up to $200 million. Variety of industries, IT, aerospace, automotive, even waste collection, recycling, and several other industries. So I have a very broad-based knowledge of technology, industrial, those type of products. Some of them even had like a service business where we actually perform service to clients as well. I started my own company, MarkTech, about 5 years ago, and wanted to take the knowledge and experience I have and share that and help small Minnesota-based companies, expand outside of the U.S., helping them grow sales and profitability. Our company, we work as sort of a sales executive for hire or fractional, partial sales for hire. We do both short-term projects with specific goal or development for a client, or on an ongoing basis. We have some clients we worked with for over 4 years, helping them expand in all different parts of the world, Typically work with the owner, the president, and the senior management team of the company. And like once again, our clients work in anything from wood processing equipment to high-tech welding systems and everything in between. We typically work with, say, 3 or 6 clients at any given time, and we work with them sort of develop an international business plan. Thank you very much.
Okay, how about Dennis? Are you ready?
Yes. So I put together a few slides, so maybe it'd be best if I introduce.
Well, how about if you introduce yourself first?
Okay, I'm with the Export-Import Bank of the United States. We're a federal agency. I'm a business development person with EXIM here in Minneapolis, and what I do is help companies understand what it is we do, and in addition to that, I'm what's called a broker account manager, which is a new role. EXIM created a role for people like me to work specifically with our brokers. And the reason for that is our brokers are an integral part of working with U.S. small businesses. So in all deals that we do, we have a broker engaged. And here in Minneapolis or in Minnesota, we have one broker based here that's a trade credit specialist, and that's Trade Acceptance Group. And Leslie's on the call, and she'll be explaining what it is they do. So yes, that's what I'd like to leave it with there, and I'll go through a few more things in a few minutes.
Sure. Leslie, please introduce yourself.
Hello, good morning. So I'm Leslie Berglund, Trade Acceptance Group, one of the initial founders from back in 1996, after spending about 19 years in the international banking industry. So we primarily work with companies that are exporting, that have to ship to their customers before they get paid. And so how do they mitigate the risk of potentially not getting paid by that foreign buyer? And the way to do that is to have accounts receivable insurance. So we work very closely with Dennis and EXIM Bank for goods that are made in the US and shipped from the US that qualify under the EXIM Bank program. We also work with private sector insurers with those companies that either want to include domestic receivables along with their export, or they have products that don't qualify under the EXIM regulations. So we have the whole gamut of options. But for small companies, EXIM Bank is the most user-friendly and the most economical. And generally, EXIM Bank is has more countries that they're open to insuring, whereas the private sector insurers are proactively managing their exposures, and so they're constantly expanding and contracting the countries that they're willing to cover and the companies in those countries. So basically, we're working with companies that need help with the pre-export finance and post-export finance, and working with their banks, particularly if the banks need to have, the buyer needs to have, or the exporter needs to have credit insurance on those foreign accounts receivable to be able to include them in a borrowing base. So we kind of step over onto the finance side, the insurance side, and then just a little bit on advising on logistics for exports.
Great, thank you. Well, my first question is for Michel, and based on your experience working for large companies, as you mentioned, and even small local companies, what are the key steps to start an export program? You're muted, Michel.
Sorry, technology again. There you go. Anyway, so thanks for the question, Mark. Like I said, actually, even in my first to have discussion with a group that I actually got a chance to participate in. This actually came up, and typically the way a Minnesota-based company gets started in exporting is one of two ways, kind of the accidental exporter that Mark mentioned. One way, and I'll give an example for one of our clients in Pine River, Minnesota, a little manufacturer there, a couple $1 million in sales. They make firewood processing equipment. They had this crazy guy contact them on their website and then call from New Zealand. And it was a one-man operation, and he was just enamored with their product, and he wanted to buy it. Can I get a container load of it? So that, well, it's like, we don't know anything about exporting, but if the guy wants to buy something, it's an extra sale. We'll take the revenue, send us the money ahead of time. Here's our bank account, and off we went. Now, there was really no plan, no really idea who the guy was, what's he going to do with it, what's the market opportunity. If this guy wants to do that in New Zealand, why couldn't Germany be a big market for us? So that's how they got started. So there really wasn't any kind of thinking or plan behind it, but somebody contacted them, money in hand, and they were ready to sell. The second one actually came up in our discussion, the breakout session. A lot of times, most of you have, a number of customers in the US. A lot of those companies are probably much more global or exporting themselves. So you might supply parts or services to them, and then they suddenly ask you to supply their factory in Germany. Let's say John Deere, for example. They have a number of factories in Germany. They have factories in China and everything else. And they expect a lot of their suppliers to be able to supply them globally. So you kind of get pushed into it, whether you really have a plan or not to do it. And that's happening more and more, even with a lot of small suppliers. And we had an interesting discussion in the breakout session that on average, the cars we drive in the US right now, most of the parts in those cars have crossed the border 33 times on average. In other words, so you have a part made in Ohio, it's shipped to somewhere in Mexico, they put a coating on, it goes back to the US, they do something, they ship it to Canada, and back and forth and back and forth. So that's the reason why there was such a shortage of new cars last spring and summer when the borders shut down. So there's more and more, so many of our day-to-day products we have actually are made in a number of different places when you put it all together. So there's a little tiny company in Bloomington here called Donaldson, about $2 billion in sales. They got started the same way. Cat was one of their biggest customers for filters for different types of engines. Cat went into China, Cat went into Europe, and Donaldson followed along. And now they have, in China, they have 10 factories in China and do about 600 million in revenue. So it is one way that you can sort of start doing the exporting. You have customers that do it. It's a good method, but it's not really a plan. So what we try to do to help our clients is basically put together an export plan, with specific information. You do some research. So kind of in general, what you want to do is, who are your main customers? What markets, what industries are they in? Looking at, the world is a big place. So where do you get started? And you don't want to just spray and pray all over the world, but where do you think sort of your products would have the most interest? Where do you get most inquiries from internationally on your website? Take that information, do some market research. There are tools available that we can offer, or also the Minnesota Trade Office, other agencies have information as well to help you determine sort of where would be good markets for me to start and build up a business with. Look at, is there any particular regulations, certifications you have to say go into Europe? What kind of competitors do you have? Do you have some advantages? Do you have a strong IP, patents, and things like that? And then once again, go back, look at existing customers. Who are the people you sell to right now that know you already are operating in the markets that you want to go into? So that's kind of how you tie it all in. You want to put together a plan and make sure that you get the buy-in from the whole organization, because it does require more of a team commitment to get into international. It's finance, it's sales, it's marketing, it's logistics, it's engineering. You're going to have to deal with warranty issues and sending spare parts overseas, for example, those type of things. So it's put together a plan once you realize that there is actually a good market opportunity for us. The company Pine River, for example, because they sell firewood processing equipment, the main market for them outside the US was actually in Europe, especially Germany, Scandinavia, some of the other countries. So that was the sort of focus of the initial plan that we put together for them, including helping them get certification for their equipment. So that's kind of the general idea and what we're trying to help companies to do, to make it easier and to help them avoid a lot of the pitfalls of maybe going overseas. Okay.
Great, thank you. Say, Dennis, can you describe how the Ex-Im Bank Express program for small and mid-sized companies and how it works? I think lots of people think that Ex-Im only serves the big Boeings and the 3Ms and those kind of companies, but how does it, how can you serve small companies?
Okay, so you're right. Most people think that we only serve the large companies, but actually 90% of the transactions that we do on a yearly basis are in support of small businesses. So that's something that's not well understood. We have an operation in place in Washington of underwriters that are experts in making credit decisions, companies around the world. So 90% of the transactions, small business. However, when you look at the amount of dollars we support, project finance around, for projects around the world, supporting transportation deals in various industries, aircraft, automotive, locomotive. So those are big deals. We also have an organization that does that in DC. So Express Insurance is for the new to export small business. It's priced very effectively. It's 0.65% times your export sales amount, independent of the country you're shipping to, is the cost. There's no real upfront cost. So 0.65% times a $10,000 shipment is only $65. So the cost of insuring receivables is it's economical. It's easy to get into, and it's important that companies look to insure their receivables internationally, particularly if they're shipping into developing countries. It's less important if you're shipping to the developed world or if you know the company very well. So does that answer your question?
Sure.
Okay.
Leslie, when should a company start to contact you?
We would prefer that a company contact us sooner rather than later, as their export sale is developing, as they're in discussions with their buyer, or they're looking at new markets. We want to make sure that we've covered kind of all the potential scenarios that they might encounter depending on the type of product that they're selling, who they're selling it to, if they're selling it through a distributor or they're selling directly to an end user, that kind of thing. So it's all of those things. It's based on country and buyer type and product. So the sooner that we can get involved and understand what the basic structure is, if there is something there that's not really going to be workable from the trade credit insurance side, then we want to identify it and maybe think of another way to go about it. As far as getting an application and actually applying for the credit insurance coverage, we need lead time there, probably a good 2 months or so. Certainly, we don't want to wait until after the goods have been shipped. It's too late then. It's definitely too late when the invoice comes due and the buyer doesn't pay. That's like any type of insurance, you have to have it before you actually initiate your transaction. So, we've got kind of this long window, but the sooner the better. And, we're happy to talk to people about their situation, give them suggestions of what they need to do next, or in some cases, how we may not be able to help them, but we can refer them to other people who might be able to do that. There could be a transaction that would be better suited for a letter of credit transaction versus an insured open account transaction. So again, talking about the specifics, in a situation, we're happy to talk about, generalities and things, but we find that until there's a specific sale that's developing, sometimes our answers get kind of lost in translation because they're not specific to that particular scenario.
Yeah. So, Michel, what type of sales channels or sales methods do you typically recommend that people look at, and why?
Yeah, actually, I just want to add a little comment to both Leslie and Dennis.
Sure.
So we've had a number of clients that actually have, started exporting and used the Ex-Im Bank foreign credit insurance. It's a really good program, and the main reason to use it is really to, once again, a lot of your competitors overseas have very generous government grants and export programs, so they can offer, say, much longer terms, 60 days, 90 days, 120 days. I know one of the clients back in time where there was a company in Vietnam that wanted 2-year terms, and we talked to Dennis and Leslie as well, and we found a Canadian bank that was willing to do long payment terms. Of course, they came with a higher interest than everything else, and at the end of the day, the client and the buyer end up reaching an agreement to payment terms of 6 months rather than the crazy 2 years. But once again, it gives you a lot of flexibility and allow you to be more competitive. So anyway, getting back to the sales channel. So once you decided you are going to go internationally or you have opportunities, and you can look at, well, what sales, who should I sell to, or what type of customers do I want to have and go after? And of course, it's a little bit relevant, of course, to your product or services you have, but there's a fair number of sort of traditional, people or sales channels, I call them, that you normally would look at. So the most common one, especially, say you go back a little bit in time, is you find a distributor. So a distributor is somebody that would basically be your direct customer. They would buy from you, place the order, they would pay you. They would then, either have you ship it to them or they manage the shipment, importation into their country. They do a lot of promotion. They typically would keep some inventory of your product. So they would kind of be like your local representative in a country or a region, whatever you select to do. Sometimes they might even help you on doing the warranty repair work or replace parts. Depending upon the size and how they're set up, they might have a service team as well. The good thing is that you don't have to have a lot of your own administration or staff to deal with a distributor. The downside is, of course, the distributor expects to make a certain amount of profit. So you end up having to give discounts off of your sort of traditional list or end user retail price. Another type of channel, which can also be in addition to your distributor, would be going one step closer to the actual end user or buyer of your product. So that would be like a dealer. Like I say, you travel around Minnesota, you see John Deere dealers in many, many towns, right? So that's somebody that you manufacturer would sell directly to, and then they sell to the farmer or whoever buys their equipment. So the resellers, they tend to buy in smaller quantities. So there's more order processing, more administration, more shipping and logistics. The good thing is that you don't have to give them quite as much of a discount. So you make more money on the individual sale. You also probably have to do more of the actual support of the customer, any type of repairs, warranty issues you have to typically deal with directly yourself. And then a third channel, which, for example, the company in Pine River that we've been working with, is they actually started sort of having an e-commerce site. There's a lot of digital marketing companies in the membership as well, so they can help you sort of set up a site that is not just to present the information, but actually to take orders. So like I said, as more and more people are buying more products, for example, for Christmas, I didn't even enter any retail store whatsoever. Amazon is one of my happy homes. Bought lots and lots of products. And when you look at where they actually come from, more than half were coming from somewhere overseas. You know, I ordered a purse from one of my daughters that came in 5 days from Jakarta, Indonesia, for example, for $20 plus a little bit of shipping. So it's more and more the things that we, even whether we buy or sell, have, you know, international aspects to it. There's another channel that is very popular overseas, or even in the US. Here we call them manufacturer sales representative firms. So it's somebody that doesn't buy the product themselves from you. They rather sell on your behalf. So they typically have a portfolio of products. Typically, it should be fairly complementary. So they go in and visit a particular customer. They can talk about product A, B, C, whatever they have when they're into their visiting as well. You would actually do the actual selling and negotiating the price with the buyer of the product, and then you pay them a commission on their sales. So once again, that's typically, say, a 5 to 10% commission. Another very popular way of doing business overseas. A lot of parts of the world, they call them agents, but the way they work is pretty much the same way. There's a couple of more, you know, sales channels, you know, way to market your product that I also want to address. These are probably more suitable for a manufacturer of a product or technology. One is a licensing agreement. So you have this whiz-bang product technology, and somebody says, you know, I like to make that in Europe. You know, can I license the technology from you? In other words, you give them the know-how, you help them set up production and everything else. And, you know, so instead of you having to market the product in Europe yourself, you have this other company do it. So you get into more of a longer discussion, negotiations, where you would actually get a one-time license fee. Done a situation like that, for example, a company in China, where the company I worked for, we got $100,000 license fee, and then we get a annual royalty on their sales. So they actually are paying you a percentage of what they sell, the products they make under license of your technology. So that was a 7% royalty. And sometimes you can also get annual fees related to sort of maintenance and management support for it. So it's a way to, instead of you having to do the selling yourself, you license the technology and you get a revenue stream from that on an ongoing basis. It does require a lot of due diligence to make sure that it's a trustworthy partner and have a really ironclad agreement. You need a very good lawyer that's familiar with this as well. But all of it, it's something that a lot of companies do very successfully. And then finally, it's the last sort of sales channel you can look at would be to what I call a private label arrangement. Like I say, when you go into, you know, whether it's Coburn or Cub or any type of grocery store, you see their house brands. Now, it doesn't mean that Coburn manufactures cereal and mustard and ketchup. They have negotiated with the manufacturer of those products to have their own brand. You know, so they are basically, they put their own label on it, but somebody else makes it for them. Very, very popular way to do, and it'll help you as a manufacturer. You get your increased volume, and you can lower your cost in your purchasing of the raw material and everything else. So that's a private label arrangement. So these are all not like you can only do one. Most companies have multiple ways of selling their products, 2 or 3 different ways. But that's kind of part of what our service and what we help companies with is to analyze and see where are the opportunities for me to sell and who to sell to. That's kind of part of the system of going internationally as well. More opportunities, more channels to look at. Okay.
Great. Dennis, you mentioned, and Michel also mentioned that there's a strategic aspect to this from, you could say, from a government standpoint as well. And that the Ex-Im Bank is part of our strategy. Can you tell us about kind of maybe one practical how it works, and then what's that strategy and how it supports U.S. products abroad?
Well,
You had some slides too, I think.
our mission is to support American jobs through export finance. We know that companies that export tend to make more money. They tend to be able to sell product. Let's say they're in a cyclical business, they're able to sell product around the world when maybe the cycle's down in the US. So the reason we're here is to support US companies' export sales so that they hire more people. It's just that simple. We do this in a way that, the key point that I'd like to make is over the last 10 years, the number of governments around the world that support their own exporters, and I say over the last 10 years, it's not by coincidence. It's coming out of the Great Recession. A lot of countries around the world beefed up their export support so that their companies would be successful. So, essentially, the number of governments that do this went from 50 to 100 in the last 10 years. That means that US companies that are going out to export are competing against the support of foreign governments. So US companies need to know, and they don't, if you don't know much about Ex-Im Bank, congratulations, you're part of the 97% of companies in the US. But we're here to provide tools for you so you can compete against not only foreign companies, but their governments that are very aggressive in supporting their exporters. In fact, China has 4 Ex-Im banks. So, and it's not just China, it's every developed country in the world. And then a lot of the top developing countries that you're competing against. So what this means is if you go in, first of all, the terms of sale, with this description that I'm giving to you impacts the terms of sale of any particular deal. So you should try to get cash in advance whenever you can. But this scenario that I'm describing is putting pressure on getting cash in advance and shifting terms towards offering open account sales. And that's where we come in as Ex-Im. We ensure your risk of offering open account sales. But every company, every industry is different. Who has the leverage in a transaction? Is it you, the seller, or is it the buyer? If you're making a specialized product or a specialized service, the leverage might go in your favor. So you may be able to dictate the terms of sale. But as your product becomes perhaps more commoditized, then perhaps the buyer is dictating the terms of sale. So one thing we suggest that you do is, it's very typical not to find that out until late in the discussion. That's just human nature. The sooner you can bring forward that in the discussion, the terms of sale, the better for you in your chances of getting a particular deal. Because what happens a lot, and this happens all the time, the seller was expecting cash in advance, the buyer was expecting credit terms, and then it sort of all falls apart there. But you'd be surprised how many times now the buyer tells the seller to contact Ex-Im Bank because the buyers know more about Ex-Im Bank than our US sellers. So,
Yeah.
So yeah, I just wanted to put that out there that, feel free to get a hold of me, get a hold of Leslie with any of these questions. We're very happy to discuss your situation with you.
Well, and that's the point of this program, is to introduce the people. And Leslie, do you have some examples of how clients have leveraged Ex-Im Bank and how you've helped them?
Sure. How much time do you have?
About 3 minutes.
Okay. A typical situation that we see for it could be a manufacturing company, it could be a services company, is that they win a fairly good size order, and to overseas, the buyer says, okay, I need you to give me 60-day terms from the date of the invoice or the date of the bill of lading. And then they win the order, and then they find out that they need financing to be able to produce the goods that they're going to be shipping. So they go to a bank, and a bank says, well, you haven't shipped yet, so we can't advance money against a receivable that you haven't booked yet. Your product is still considered inventory on your balance sheet. So they end up talking with a specialty lender that uses the Small Business Administration program for working capital. And so we partner up with that bank, and that bank offers what we call the pre-export financing. So they provide, based on a confirmed purchase order, they provide a portion of the money needed to the exporter so that they can buy the raw materials, or they can buy the product, or they can cover their work in process before they're getting it ready to ship. And so they borrow from a bank a certain portion against that order. And then once the exporter ships the product, then they're covered by the credit insurance. And so they can have coverage of up to 95%. So if the buyer defaults, it doesn't pay, then we claim on the insurance, and the exporter has the ability then to use the proceeds from the claim payment to pay off their loan to the bank. So oftentimes, and I had a conversation like this earlier this week, where a middleman is looking at capital equipment that is, was almost $9 million, and he's got this great contract for selling to Brazil. But when I asked him how he was going to get the money to purchase the goods before they had to be refurbished and sent, he said, oh, I hadn't thought of that. He goes, I'll have to work with my bank. And I said, well, the fact that you have the sales contract doesn't mean that the bank's going to give you that money without some kind of support. So the US government, both SBA and Ex-Im Bank, can guarantee a bank to be able to have that bank lend to the exporter to make the goods that are going to be exported. And then once they are exported and there's an account receivable, then SBA or Ex-Im will require that the exporter have the credit insurance to cover the potential for default. And a banker will require that as well.
Great. Well, and I had this happen to me once, where I made a presentation, introduced a U.S. manufacturer. We had a deal on the table. It was the best. He was the best pizza equipment manufacturer, designer in the U.S. But the foreign company came in and offered 1 year free money. It's hard to compete.
Right.
And we hadn't even got to terms at all, even in our discussion yet.
Mm-hmm.
And so having that ability and having that kind of leverage with the U.S. government to at least offer terms is so critical.
Yes.
In the discussion.
Yeah, and I can give an example too. It's a company that both Leslie and Dennis knows well. American Time in Dassel, Minnesota, population 1,400, I think, 15 miles north of Hutchinson. They are selling, time management clock systems for schools and businesses and whatever else. And they had a project in Kuwait, of all places, where the government of Kuwait had put aside $2 billion to build 9 new universities. From scratch, and they were involved in this project. We were going to build a university, a technical university, and American Times system is one of the last things that go into the construction. They build the building, they break the ground, they put the building together, and then they start putting all the different systems in there. And this was at the very tail end, and they were competing with Chinese manufacturers of clocks and time management systems. And they used Exim Bank and Leslie for their foreign credit insurance. And they got an order, I think it was a $150,000 order. So, I mean, it's a significant amount of money for them as far as their export sales were in that, say, $500,000 category. So it bumped up their export sales that year significantly, but they couldn't have taken on the risk without the help of Exim and Leslie from that aspect. So.
Can I jump in with a question?
Yeah.
Sure.
With some of your successful clients, are they, you mentioned earlier, and I think Dennis, it was you that mentioned it, that they're most buyers from outside the US are aware, or it's more often that buyers are aware of Exim Bank. Are you finding that manufacturers are using this in their marketing to showcase their relationship that they already have established with Exim Bank in order to attract more buyers? Has that been a beneficial thing, or have you heard of manufacturers doing that?
I'd say it's not widespread. That it depends. I have seen some equipment manufacturers that bring out our medium-term financing, which is, if you're an equipment manufacturer that selling more than $250,000 worth of equipment, there are financial institutions in the US that will finance that for 5 years. I think in that situation, those manufacturers want to bring that forward and show that that is an option because it is the Chinese, the Italians, the Germans, they bring that forward and present that right away, that type of financing. So that's my impression. Leslie?
Yeah, I mean, that's very true on the equipment side. On the short-term side, it really depends on the reason for a company that would want to use credit insurance. If they want to just use it for one-off deals, they want to use it for new customers, they want to use it for entering a new market, then, if they know there's competition, especially that is supported, like a German or French, that we know there's going to be support from or China, support from their government, then they want to make, their customer aware that they could do something similar. So again, it depends by product. It depends on how widespread the company's exports are in terms of the variety of countries that they sell to. It depends on whether or not the exporter has used some of the other government programs, the Gold Key service that the Department of Commerce offers in country to help define markets and help the exporters find distributors or agents. And usually, Exim Bank's products are part of that presentation. So it's kind of all over the place, whether or not some people are aware of it. The one thing I would say is that our most recent experience has been where the foreign buyer told the seller that they should use Exim Bank. And so they sent in an application, and they were almost too slick in terms of saying, here's how Exim Bank is going to work. And then once we started getting all the pieces of credit information put together in the application, we discovered that it was a fraudulent transaction. So, there's that side of it too, where if the buyer is a little bit too aware of how Exim works, either, they already work with other suppliers that are selling to them using XM support, or it's part of a scam.
Yeah.
So again, it's very much, what's your situation? Who are the parties? How well do you know your buyer, your customer? Make sure they aren't on any bad guy list with the government. It's just a whole can of worms, but you want to make sure that, everything passes the smell test, because again, it's so easy these days to have somebody hijack an email and act as the intermediary, pretending to be, one of the other parties.
That's another reason why we suggest using a broker, because Leslie and Mason, who works with Leslie down here in Minneapolis, their expertise, they understand when something doesn't pass the smell test, and having that kind of expertise on your side when you're exporting is very important. And
I mean, some clients that we have had or are working with, they tend to be smaller companies, so the companies deal with tend to be smaller, so they're not necessarily aware of Exim Bank, but it gets down to that the buyer himself might not be a big company. For example, we had a company in the UK, there were sales of about a million pounds, so 1.3 million or something like that. He wanted to buy in container loads, but that got the price tag up to $60,000-$70,000. And of course, you have the production time, the shipping time, importation, and you had to sell it. So he needed to have about 60-90-day payment terms in order to make it all work. The advantage for our client in Pine River was that, I can produce 6 or 8 of these machines. They're running about $10,000 a piece, whatever. And also on the shipping cost, if you shipped one of these machines, they have weight about 1,700 pounds. Ship one would cost about $2,000. You ship 6, the cost per unit was 500. So the shipping cost suddenly became a big percentage of the cost, and you were fighting with European-made manufacturers of similar equipment, or at least similar purpose equipment. So shipping costs could really add up to the cost of an export that you have to take into account, and by them be able to offer this company in the UK financing through Exim Bank and through Leslie with Foreign Credit Insurance, they could actually sell in larger volume, higher revenue amounts right away, instead of sort of waiting over time as this company builds up the business and have more cash. So it's been a great tool for, these are actually very small manufacturers, a couple of $1 million in sales. The one out west here in Dassel, about $10 million in sales. So it's a great tool. It's the best kept secret in the universe. Right, Dennis?
it's very true.
So we're running up.
I'm
Go
sorry,
ahead.
can I add one quick comment? So, when Michelle, you mentioned that, accidental exporters might get an order through the internet. What it comes down to is, we have a willing buyer or an interested buyer. That's great, but the credit insurance is not going to cover the risk of a buyer that's not financially viable. And so what I like to say is, credit insurance does not make a bad credit good. Okay, it's going to reveal how strong financially that customer is. And so if nothing else, this is a good way to pre-screen the buyers. Are they legitimate? Are they big enough to support what it is that they want to do? So again, that's one of the reasons that we want to get involved early, so that we know that your buyer is financially able to complete the transaction and get the payment to you.
Yeah.
Because credit insurance is not going to cover somebody that isn't going to qualify.
Yeah, and you have to, most of our clients, they typically, like I say, one case, it was a big project, first time with a so that was signed up for. Some of the others might have customers that they've developed over time. So maybe they selected for 2 customers or 3 customers for a specific country. Very few have actually sort of wholesale signed up for it to cover every market they might be exporting to. So the good thing is that you could add it as you need it, in markets. And then of course you have an ongoing relationship as well. So.
Okay, any other questions from the floor?
I have one.
Doug?
One of the things we brought up kind of at the beginning of this was how this can affect company valuation. And being in some of the M&A processes with the company before, there was a portion. One of the things that we look at when you're preparing a company for sale is the diversity of the customer base. So you don't want all your eggs in one basket. And so it's, if you have 400 customers and lose a big customer, it's different than having 20 customers and losing a big customer. And we kind of looked at the exports that we were doing to Canada at the time as a single customer base in a foreign country, which we really couldn't count on as a predictable revenue stream. I mean, it was then, but when our buyers asked about it, it was something that we personally kind of discounted and say, there's not enough. This is all of our eggs are in one basket for our exports. So for us, we didn't really consider it part of the valuation. So I wondered if there's any exporters here or any idea about at what point do you have enough exports going on, and maybe it's relative to the company, to where valuation is affected positively because it's just not a one-time sale or a one customer that if it goes away, it's going to be hard for you to then service the customer base they had developed.
I mean, well, it's a good question. It kind of makes me think too. I think that if you have to look at it as a percentage of your total revenue, right? So let's say the company is $10 million in annual sales, but export is 1%. In that case, it's fairly insignificant, right? But early in my career, and I worked for a company in Plymouth, and we reached a point in 1990 where export sales for the company is 55%. Privately held company, about $20 million in revenue. That was a significant, so that would need to be taken into evaluation. Now, it wasn't one single market, it wasn't one single customer. So we didn't look at, say, Canada as one customer. We really looked at, we had a big customer in Germany, for example. I think Europe at one point in time in about 92, 93 was 6.5 million out of 20 million. And Europe itself, and that customer was like 2 million. Yes, that's a significant risk. But at that case, if the company, it wasn't planned on selling it, but for evaluation purposes, having 55% international was a huge part of the business, right? About 10 years ago, I was in aerospace, and we did about $50 million a year, but it was a lot of projects. So we could have a $10 million project, and then, so the revenue went up and down quite a bit. But at that stage, probably 80% of new products were happening outside of the US because it was aerospace. A lot of the US airlines were not maintaining or repairing, fixing their own aircraft. They sent them over to Asia, including China. So we did almost all the projects were overseas. So for that kind of client, I mean, it's a huge part of the evaluation. So it really gets down to, I would say it's once you hit something where export is say 5 or 10% of your revenue, it definitely takes into account. And, the bigger the firm is, I think the more potential investor look at, how geographically diversified are you, in addition to industry and size of the specific customers you have, for example. So I don't know if that answers your question, but that's kind of my thought on it, that you have to hit a certain percentage before it becomes significant, in your evaluation of the company.
Yeah. So So if you're going to make a commitment to doing international business, you probably have to have some idea of where it has to be before it really positively affects maybe the valuation. I don't know.
I mean, that's kind of part of what I mentioned early on, is that you, instead of just sort of taking an order here and there, or one of your US customer says, hey, I want you to ship something to my factory in Guangzhou, China. When you make a plan, you want to set a number of goals. Okay, who we're going to sell to, which countries are best, where's the most competition, and what's our plan? How much money are we going to put towards, achieving this thing? And what is the revenue goal? It's like, that's a good thing about sales. It's that it's black and white. You have a goal, whether, so you hit it or you didn't hit it, right? So you can measure it fairly easily, right? And that's the same part of, just like putting any business plan together. You set goals, you put resources towards it, you realize who needs to be involved in it, and that's how you make it happen. Now, I would say that once you hit at least 10% or 5 to 10% of revenue, you should take it into account in your valuation. If it's less than that, yeah, not such a big deal. It's just like having a customer that I had a last company I worked corporately with $200 million in revenue. We sold to one of the big truck manufacturers. It was $55 million a year. Now, if we lost that one, it would just wipe out, probably have to lay off 150, 200 employees. So that I know exactly what the risk is, that you have a few customers that are so dominating your business. So you'd rather have 100 customers than just 4.
I would
Thank
add to that one thing that Dennis touched on is, what's the reason for their doing the exports? If they're an ag equipment manufacturer and, they've got their market here in North America, and they're also selling to the Southern Hemisphere, which is a different growing season, that's a very important part. It could be a small dollar amount, but it's good for their diversification, and it keeps their plant going year round as opposed to just seasonally. So there are things like that that also would add into, your consideration of whether or not the exports have value for valuation purposes.
Also, from the product development standpoint, if you've addressed your product to a new market, you may have improved it, or you've needed to gain more certifications of quality. Sometimes we found, for example, CE mark is understood in other markets, even though you're not selling necessarily just to Europe. So it may increase the value of your product. The other thing is that you may also develop the network, and working with a foreign client, you bring in their expertise into your business, and that can work both ways. The licensing potential, for example, they may produce a better product.
Yeah,
at least for their market.
Yeah, like for example, this company Pine River, Mark, remember the operator manual that they had? It was basically the owner had putting together on a bunch of cocktail napkins in the favorite watering hole, about 12 pages worth, and there was red marks and different fonts, everything else. And we had to make a CE certified product and manual, ended up being 45 pages in all kinds of detail that they're now using domestically because it's much better. So, once again, those are side benefits. Can you put a dollar figure on it? Not necessarily, but it's a lot of, and a lot of these customers overseas, they ask, well, why don't you do this? Or could you add that to it? They want a hydraulic function of this one. Well, I guess we could do it. So you get the different idea flowing as well from different parts of the world. So there's additional benefits. It's not just dollars and cents.
Yeah. Well, in
Thanks, great
respect of
answers.
time.
Yeah, Amy.